everybody, it's Marcel Klinovic, Boss Blunts. Just going to wait for some people to jump in on the stream here since I just started it up. Give people some time if they want to join in. Going to go ahead and share this on Twitter just to get it out there a little bit. It's a nice little chart for you to check out while I wait for some people to get in here. Just going to throw this out there on Twitter. Give people a couple minutes to get in here since I just started the stream. Going to share that over on Twitter now just to get it out there. So, AMC, GME, Ape Nation. We can talk about the stock market, real estate, anything really, but the fact is here that there's a lot of new information with these total return swaps and credit default swaps. And it's pretty crazy. Look at these correlations here. These things are running almost the same. All right, just shared that over on to Twitter. So like I said, I'm just going to give people a couple minutes to jump on, see if anybody wants to. In the meantime, check those charts out if you want. It's my recent LinkedIn post. You know, these credit default swaps being up 5,000% is a big deal because it directly shows that this is what they're using to short stocks like AMC and GameStop and Tesla and others as well. They're literally using credit default swaps and these collateralized debt obligations, CDOs, total return swaps. I'll let you guys check that out a little bit in the meantime. This is the futures contracts as well. So it kind of explains the chart as to how the most recent charts look. This is the GameStop chart, of course. Wow, Silhouette. Every place you went had hiring signs and almost no workers. You're absolutely right, man. The Burger King down the street from my house here, it was closed at 4 in the afternoon a couple days ago. Why? They just didn't have anybody to work it for second shift, you know? Then they're usually open till midnight. So, and I'm seeing that everywhere I go. What's up, Bigums? Is the body cut off? Oh, the knowledge, the looks, the body. My man, you're too funny. You're too funny, but if you guys feel like sharing it on Twitter, I just blasted it out there. I think this is some really good information here on the futures contracts and the way that the August 26th date looks on here. Here, I'll move my face out of the way. You don't want to see me anyway. Check out One Punch Man. Got to stick with the anime. Hello, Susan. What's up, AMC, Bigums, Silhouette? It's nice to see you guys. Good morning. Good evening, everybody. Yeah, it's true. It's 12:30 in the morning over here in Chicago. I'm sure for a lot of you it is as well. Or very late at night, one or the other. While we wait for see if anybody else wants to join in, we've got about 15, 16 people in here so far, and it's joining quickly. So we'll give a minute or two here to see if anybody else wants to join since I just tweeted it out. I'm going to roll the blunt while we wait. What's up, Tapped In Mindset, Bookman, Susan, AMC Bigum, Silhouette? Thank you all for coming out. I know it's late in the morning, or early in the morning, I should say, late at night for a lot of you guys, and myself as well. You know, I got to be up at 7 o'clock almost every day. So, but this stuff is just so fun, and you know, with the kids and a family, it makes it kind of tough to get on at an earlier time. So, I kind of do everything on my time since I am the fucking boss. So, here I am. The Morpheus chair. Are you talking about that thing in the background? What is this? Are you talking about this one? Here, let me move myself over here since nobody wants to look at me anyway. But yeah, see, look at August 25th. Check that out. This is the beginning of the repeating cycle for these futures contracts that need to be rolled over. And they're on a 3-month cycle. And look at what happened here on the last one. Look at these dates. Beautiful, beautiful. And now we're going to see it again here. This is the beginning. What we saw today was just like this first teeny bitty titty candle right there. That was what we saw today. You know, I should say, what was it? August 25th. You know, I think on the 26th, August 26th, once market opens, we're going to see a nice fat candle like this and a few more days, maybe even higher than this. And that's going to take up this next chart. And that's going to bring us up even higher. What's up, Mauve? Thanks for coming out. What's up, Be Real? Can't roll. I'm out, but I do have a pen. Let's get lit. That's what I'm talking about. All right, give me a second here. I'm just going to roll one up. I love this grinder, Pitara. That's a fantastic grinder. You guys should look into them. Got them on Amazon. Sorry about that. Sorry if that was a little loud. Let's see what we got here. Got a nice bag here. I don't know if it's going to mess up the focus. Got some pretty good nugs in there. Think a nice big nug like that one. What's going on, Greg? Glizzy with Mustard? It's good to see you guys. Appreciate y'all coming out. You know, while I go over this stuff, feel free to throw questions at me, okay? There's like about a 20-second delay on when I see your chat from the actual stream itself. So go ahead and ask me any questions that you guys want while I go over any of this, and I'll stop and answer it to the best of my ability. I promise you that. So I'm just going to finish rolling out this blunt. We're done in about a minute. You put a Silhouette. I don't regularly invest, but yesterday I put $1,000 into both AMC and GME. Nice. And you're holding because you believe in the cause. Absolutely love to see that. You know, same here. Same here. I made some really good money on options. I put several thousand into it. A lot for me a few days ago. And then I did really well on some options plays. I was doing December 17th. I did some Octobers. No weeklies, only monthlies. And I did very well. I sold a lot of my Septembers and Octobers and rolled it all to December and January out of the money call options. Also bought a lot of shares with some of my gains, so got to maintain diversified. Got to keep that, you know, really, really safe. And with shares, it's a lot safer than options. But as you guys know, those when that IB pumps, you can really get those options going and make a ton of money off them. If you play your cards right, you really have to be careful with them because they could burn you up, and that theta decay and, you know, the manipulation on this stock will have you, you know, wishing you would have never touched them. Greg Peters holding 3,795 shares of AMC and 28 GME. That is awesome. That is fantastic, Greg. You are going to do wonderful things for people with that, you know, with anything that you want. I love to hear that. Black Zero, Bitcoin is tanking. Abraham Lincoln, good to see you. And Silhouette's is breeding cannabis in Colorado. I love that. My friend's got a farm over in California in Mendocino County. We're working on the legal transportation of his marijuana at this moment. So there's a lot of supply chain and governmental issues and regulations when it comes to moving pot. So you got to do it legally and properly for it to really, for it to work out. You don't want to get caught illegally moving weed. That's fucking dangerous. It's got to be all 100% legal. David, good. Thanks for coming in, guys. Yeah. So anyways, if you guys want to take a look here and be real time, you know what, man? Post Moass, I'll buy you a Morpheus chair. Way nicer than that one, brother. Don't even worry about it. All right. Let me tell you that right now. So yeah, this is the futures contracts. So this is like the green part is a gamma ramp up. And this is what occurs when they have to turn over these futures contracts. And I can explain these to you a little bit more in depth here really quickly. I can take a long time to do it, or I can do it quickly, and you guys can stop me if you have questions. So I'll try to go fast and then just throw questions at me, and I'll try to get to you guys. Basically, there's these super senior synthetic collateralized debt obligations. It stands for, its acronym is SSSCDO. You'll call them super seniors. These are basically like credit default swaps. There's also these futures, total return swaps and all sorts of other things that they've been using. But these are a very big deal because every run-up that we've had coincides with a lot of these futures. Look at this last run-up back here. I'll move myself over. Sorry about that. From in February, what happened here at the end of January? Well, this was February 23rd, run-up through March. And because what happens is they're hedging here to roll over some of these positions. So naturally, the way that it goes is let me zoom out a little bit for you so you can see this first part. The futures are used to hedge against the equity total return swaps. Okay, these are just collateralized debt obligations, or you can call them CDOs, you can call them CDSs. They're pretty much the same thing with a different name. They're polishing turds, same turds that they used back in 2008, and they are selling them off as these beautiful investments, and they're not. So they hedge against these total return swaps prior to the first day. As you can see here, it starts to just really ramp up. And so this exposes the risk of the ETRs for the upcoming futures. And there's always a gamma ramp up each time this happens. Hey, David, I hear you, man. I never fooled with weed legally either until recently. Yeah, so check this out here. And August 25th is the beginning of the next one, and that was yesterday. For most of us, it was yesterday, or it was earlier today if it's very late where you're from. So I really do feel that there's going to be this gamma ramp up that we saw from February 23rd through March 11th, May through June 10th. We're going to see the same exact thing. Look at these patterns; they're so repetitive. Because it's an algorithm. It's algorithmic buying. So look, shorting long term. And you could day trade this here if you wanted to, but damn, it's dangerous. And then here, we had one nice green candle, and we haven't gotten this far yet. We haven't even gotten to the 26th. We just finished the 25th. And look at what the candle looked like on the 24th compared to the previous one. So it's already about a third larger than the one we had previously. So what, if you would just guess, do you think maybe we're going to have a third larger of a run up on this one, and see that might even cause further gamma issues, gamma squeezing and delta hedging that we didn't see in the past on these last run ups? Because now with all the new filings that are coming in on September 1st and the new margin regulations, and then on October 1st, banks have to be able to hold up to $1 trillion, and they have to stress test it every single day. So there's going to be some interesting shit going down. Why do AMC and GME charts look almost identical? I am glad you asked, Silhouette. Check this out. Let me see if I can get this to work out without destroying my computer here, messing things up too bad. Let's see. One second. Let me get this thing out of the way. And it does not want to. There we go. You want to see that they run together? Check this out. GameStop, AMC, COS, Express, BlackBerry, Bed Bath & Beyond. All right, GameStop is the blue one, and AMC is the yellow one here, this one. It's GameStop, the blue one, and it's AMC. And the reason that they run together is because these exchange traded funds and these total return swaps, these credit default swaps, and these futures contracts, they pack, excuse me, sorry, they're all packaged together. So they're taking GameStop and AMC and all these others that they want to short and beat up on, putting them into these ETFs and then packaging them together in order to short the hell out of them and manipulate them and pump them when they need to in order to, take advantage of money they're making off of call options. And there's some fear in John Molina. Thanks for commenting. He says there's some fear into tomorrow for indices due to the talks and ATH. What do I expect is going to be the reaction for tomorrow? I am glad you asked, man, because I've got that thing ready to rock and roll. We've got the federal calendar here. That's going to be at 10 o'clock in the morning tomorrow, the J-POW meeting. And he's going to say that inflation is transitory. He's going to say that we're going to start tapering pretty soon, and it's not going to be a great thing for anybody. It's just going to be, he's just going to try to make everybody feel better, but I don't think it's going to work. I really do not. Where's his damn calendar at? Oh, right up top. This is the Federal Reserve release calendar for, let's see what we got here. The 26th, today we have the interest rates, of course, and factors affecting reserve balances reports coming in at 4:30, as well as the one you were just talking about is the 10 a.m. speech from Jerome Powell, the economic outlook, and that's going to be at the Jackson Hole Economic Policy Symposium on a live stream. You can watch that here. You can click go live. So if you Google Federal Reserve calendar, it'll bring you over here to the month of August, and you can actually click it and watch it live if you don't have access to like a television for whatever reason, or even if you're using your smartphone, you can pull it up and just listen to it or watch it on your smartphone if you have to drive, so that you don't have to like watch it. We'll also go over the on Friday. We'll also go over the H8 assets and liabilities, because we've been taking a look at them every single week, and they are just increasing exponentially. The liabilities are increasing so much faster than their assets, because they're losing so much money on these derivatives. It's insanity. All right, what's a total return swap? It's a contract which captures an agreement between two parties to exchange the total return of an asset. So usually one party agrees to pay the total. Usually one party agrees to pay the total return of a security or the portfolio of securities in exchange for the returns. So as you can see here, Party A and Party B kind of have a spread going here, and the maturity and payment schedules is down to whatever the hell they agree on, This is the 12-month LIBOR rates. All right, this is the London Interbank Offered Rate. This is the amount that the London Bank charges to borrow money. And as you can see from 2020, it dipped dramatically, and it's low right now in 2021. So these companies, such as Citadel, are using their London offices and their overseas Cayman Islands offices to borrow money and short these ETFs, these total return swaps, these credit default swaps, all these packages and programs that they have. And because they're doing it, it's so cheap right now. It's the only thing keeping them going right now, because pretty soon rates are going to go up again. And but because they're managing all these together, sorry about that, I just managed to close that out wrong. This is why they run together like this. All right. And these futures contracts are another issue that they've got going on. And again, look at the gap up from February to May or March over here. The gap up again in June. And here's August 25th today. As we all know, we had a nice green day for the most of the day, and it got shorted a little bit towards the end of the day, but that's fine, because tomorrow is the real beginning of the August 26th of the days that they have to start covering these future contracts. They always go in about like a 2-week period. So the futures are used to hedge against these ETRs, and they're settled prior to the first notice day of August 27th. All right, today's the 26th, so they got to settle a bunch of them. And that's going to cause gamma squeezing like it did previously, like back here, here. And I think we're going to end up much higher on GameStop as well as on AMC. Let me go back to your questions. I apologize if I haven't answered any questions. Let me come right back over to you guys. Let's see. Bitcoin is tanking. Yeah, man, I hear you, Black Zero. They're probably pumping and dumping crypto really hard right now over at Citadel. Silhouette. I'm really looking to purchasing an Air Solo vaporizer. I hear you, man. The vaporizers are really nice. I just I love smoking. Smoking weed. John Molina, yeah, I hear you about the fears in tomorrow for the indices due to the talks. The reaction on AMC and GME tomorrow, as we've been discussing, is going to be very bullish. We're going to be seeing some beautiful green candles. Look at all this proof right here. This is pretty clear cut. Okay, this is very clear cut stuff. Look at the correlation of daily close prices between meme stocks in 2021. This is a pretty interesting correlation. It shows when they're hot. This is the predictor of GameStop close price with other meme stocks. So the yellow line is GameStop's close on these dates, and these months, excuse me. And these are model predictions that were assessed and given to GameStop as expected closing based on the way that other meme stocks that we just saw were moving. Because it's so algorithmic that the pattern is completely, it's recognizable. It's recognizable. So that's why we've got to really look into this stuff. So anybody that says that the due diligence is done, I think is just full of it. I don't think the DD is done at all. The DD is going to be done until the Moass happens and we all get filthy, stinking rich. That's when the DD is going to be done. After this does shoot, any recommendations on where to go with some of the money to live off the interest? Greg, where to go? Do you mean to move? Also, if they pass the bill to extend margin debt, will it prolong the squeeze? Even if the Congress is almost completely unlikely of agreeing on this, there are 46 congressmen that are directly opposing this. And all of the Democrats would have to agree for this margin ceiling to be increased. And there is further talks that we just went over in the last video that states the Republicans are not looking forward to an agreement because they just can't come to one. The infrastructure bill, as well as the debt ceiling issues and the increased spending for Medicare that the Senate just put into play, is going to be even more. So even if they do pass the debt ceiling, it won't prolong the squeeze for very long. But it's not going to happen, man. It's their way of managing it, in my opinion, and trying to make the squeeze happen in a certain time frame. If they want to get it over with before Q3 and before the end of Q4. See, AMC and GameStop charts are the same because they're both being manipulated, said Ty Bolek. And you make an absolutely great point. Let's pin that message right up top because you are on point, man. Is AMC IV looking okay compared to its historical set? I think AMC IV looks great. I really do. I think the IV on AMC looks really good. It's a little high currently, but it's not bad at all. It's definitely worth investing in my opinion. I bought options today. I sold options today, and I bought more options today when the price came down a little bit. So that was just my personal feelings. Another thing I wanted to bring up to you guys, check this out. Look at gold. China's gold reserves scale up for 15 consecutive years. All right. China now has more gold than the United States. They have almost 15,000 tons as of 2020. And the total traded volume of gold in the Chinese market reached 95,000 tons in 2020. So that was almost 14% of all the gold transactions around the world. So this was the previous amount of gold reserves in 2000, and this is the gold reserves in 2021. So China is starting to gain here. Let's back up. Why did this get cut off on the bottom? That stinks. Yeah, as you can see, the amount of China actually have is much bigger here, because the way that they move gold around is, first from a buyer, then through a trading code. They deposit money into a trading terminal. A computer matches it through a clearing services. The sellers withdraw the money. The buyer applies for physical delivery. It's transported between vaults, and they do a physical delivery of gold. So the exchange traded flow chart is a lot different in China than it is in America. So they actually deliver some of the gold to people, so it's not shown on a lot of this. Oh yeah, exactly. See, China has a lot more gold than they're actually saying, and they're going to at least partially back the yuan with it in digital currency. China is coming out with a new cryptocurrency. It's going to be a digital, government-regulated cryptocurrency, and they are going to back it with gold in a sense. And they're trying to do a real power play against the United States, because their economy took a serious hurt. And it's kind of a race right now, I think, with the infrastructure bill having these cryptocurrency regulations in it and stashed in it. It's going to get, once it does get passed, it's kind of going to get expedited and looked over. This is going to be bad for a lot of crypto in many ways, but it's the United States trying to regulate it in order to be able to have the United States be backed with, kind of have instead of the US dollar being actual printed money, they might move entirely to a cryptocurrency dollar. That might be a possibility. They may no longer print dollars. How many people now use debit cards anyway, or credit cards? What would be the difference? You would just have a debit card for your cryptocurrency, and you wouldn't have to worry about getting pennies and coins and dollars. Sorry, guys, I didn't mean to ignore this here. Let me see. Ace of Shades, Marcel doing God's work. Appreciate. Man, I'm humbled, but no, I'm not doing God's work. I'm just trying to explain to the best of my ability the things that are occurring right now. Thank you, though. Chasing Mulder, thanks for your answer in advance. What's your take on GG's appointment? Gary Gensler, he's the head of the SEC, for those that don't know. Appointment of the new anti-retail investor, Barbara Roper. Let me take a look, man. I actually don't know who this Barbara Roper is. We've got to find out real quick. Gensler taps Wall Street critic Barbara Roper as a senior advisor. I'm going to go to the SEC website so we can check this out. The Securities Exchange Commission announced that they appointed Barbara Roper as a senior advisor. She's currently the director of investor protection for the Consumer Federation of America. This is good, guys. This is really good. We've got Gurubir Grewal, the new prosecutor. The guy was the head prosecutor for the state of New Jersey. He did awesome things. He prosecuted so many people. And to see this now, it just kind of shows more of like how hard they're working, and Gary Gensler and these people to make real reform in the market. It's got to be done, first of all. But the fact that they're taking the initiative to try to overhaul, because Dodd-Frank is currently being used, it's being used and abused. Dodd-Frank Act is kind of being messed up. It doesn't really mean anything, because they just skirted around it with all these return swaps I just told you guys about. That's how they got around this Dodd-Frank stuff, with all these total return swaps based out of London. They take these total return swaps and these credit default swaps and these CDOs, and they move them to London after they're purchased. And so even though they're U.S. shares and assets and things like that, because they're now based overseas, they're able to borrow them from with much lower rates from LIBOR, for example. And keep them over there in order to not have to follow these Dodd-Frank regulations. It's easy. That's why these damn things these credit default swaps are up 5,000%. So we're all these meme stocks that are all bunched together, supposed to be part of the plan to bankrupt and pay off past debt, asked Jason Cornell. No, these meme stocks were put together because they wanted to bankrupt all of them, just like the same way that they did with like Toys R Us and Radio Shack, and they knocked those guys out. They wanted to do the same exact thing here, because when that happens, they don't ever have to report their synthetic shares. They don't have to report all their assets that they lied about, that the shorts marked as long. They don't have to buy back any shares, so they don't have to pay capital gains on all those billions and billions of dollars in money they made off of call options, synthetic shares, and naked shorts, and all this shit. So that's why they put them all together. And then with COVID, they really thought they can get GameStop and AMC. And little did they know, 5 million apes were going to come along, snatch up all these fucking shares and say, you're not fucking putting our video games and our movies out of business. I'm an American. I'm a human being. I like movies. I like games, and you're not going to take them from us. You're not going to short them like you did to our Radio Shack and to our toy company that we used to go to as kids and take our children to. And so I'm happy. I'm very happy that, AMC and GameStop are still in business and that this is what's going on. And then because we're not the ones that over leverage the whole United States economy. These banks are. All right. And if you don't believe me, take a look at these derivatives. Let's go straight down to the holding company credit default swap, so you guys can see this again. Centrally cleared derivative contracts. Centrally cleared means not in dark pools. The majority of it all was cleared in dark pools. Holding company trading revenues up. How much? 200%. That means that they more than doubled the amount that they had in holding companies. That's a shell company, okay? Oxford Dictionary says a holding company is a company created to hold and manage shares and assets of another company. All right? The credit default swaps are up 1,603% for these guys. That's these. Okay? That's these. That's all of these futures contracts. That's these total return swaps. This is what they're using to the super low interest rates from LIBOR in London and such to short these ETFs and these total return swaps. All right. That's why these things are all running the same, because they're being abused so badly with the 1,600% increase in credit swaps in 2021. And for banks, you got to look at this. For the banks, it's 3,400% increase. So the banks have increased it by 3,400%. Their holding companies increased it by 1,600%. That's over 5,000% right there. In amounts of ETFs, total return swaps, CDOs, CDSs that they've created in order to short, and that's what's caused their total derivatives to get out of hand. This is the report from the OCC. Let's go over to the BIA report, the gross domestic product, and that'll give you guys another even bigger idea of what these liabilities are like. Because I'm not making these up. This is the 48-page quarterly derivatives report from the OCC, the Office of the Comptroller of the Currency. Here's the Bureau of Economic Analysis report, telling us just how shitty our expenses, our inflation is, and our unemployment is, and getting out of control. But let's go straight down to and that's the wrong one. Sorry about that. Let's go straight over to the H8. Yeah, no problem, man. I'm glad I could answer you. Let me see here. Let's see. Sorry, I'm trying to catch up on your chats, guys. Is AMC bussin'? AMC and GME are bussin'. We are going to the moon. But I'm not sure. I'm not saying the Moass is tomorrow, but August 26th, later today. It's going to be a fantastic day for us. It's going to be a wonderfully green day. This is not financial advice. I'm not a financial advisor. I'm just a business owner, an entrepreneur, and a real estate investor, and a stock market investor that thinks that everybody deserves to know that these banks owe $189 trillion in liabilities. All right, check this out. Look at how much their liabilities are increasing in 1 year. $1.6 trillion. The residual assets, however, are only going up about $500 billion or $50 billion. Nah, it's $100 billion. Sorry. So they made $100 billion after expenses, but they lost $1.6 trillion on table 2 of 11. Let's go to table 3. Liabilities. And what does this mean here? Just in case you don't know, check this out. 22. What are these liabilities here? This is what they are. Subordinate notes, debentures, net deferred tax liabilities, interest, other expenses, accrued and unpaid, accounts payable, liabilities for short positions, derivative contracts with a negative fair value, other trading liabilities to which fair value accounting has been applied. That means they have no idea how much they're going to lose. They're just guessing with fair value accounting. So it could be 10 times that amount. And other liabilities. This means FTDs. But what doesn't it mean? Naked shorts and synthetic shares, because they haven't been reported. That's what it means. It doesn't mean, it does not include the synthetic shares and all of those shares that are marked as long, when in reality they are short positions. Let's see, let me go back to the chat. Sorry, guys. Swing right back over here. This is from earlier today. I posted this on Twitter, you guys. I don't know if you remember this. I remember the 2008 stock market crash and the real estate crash. I remember the homelessness and the joblessness, the inflation and the struggles, and the hedge funds that were laughing at Americans. Look at these fucks. This was in 2008 when they were laughing at the people protesting at all the banks that were bankrupting our country. It's going to be the same shit, except these guys, this time around, these guys are going to be the ones being escorted out of the building like in Lehman Brothers. Here in Chicago and in New York and all places worldwide when these banks and hedge funds are getting margin called. And I'm not saying Barbara Roper is our friend, but all these people combined are going to do good things for the community. Like, let me show you real quick what the SEC is actually doing. Today they prosecuted, they freezed a bunch of assets and did all sorts of stuff to prosecute some illegal activity. Let me just get down to it. I posted all sorts of shit about AMC today and their algorithmic shorting. Check out this bull flag on AMC. This was right before 2 p.m. And as you can see, we kept consolidating. If you look at the chart, kept consolidating, and we ended up right around the $44 mark, like right down here on this chart. And tomorrow we're going to see a nice increase, I believe, a nice run up here, way past the $50 mark. If we pass 52, I think we keep running. But if we stop at 52, that might be the top for the day. I'm not sure. 52 is our next resistance point, in my opinion. Oh, yeah, look at yesterday. This is how I knew they were going to be doing quite a lot of shorting today. Look at the crypto that was happening yesterday afternoon, right after the market closed. Everything in crypto was dumping hard, just like somebody mentioned earlier today, because a lot of these hedge funds and market makers and banks are liquidating their assets because crypto does not count towards their margin requirements. So they have to take money out of the stock market and buy Bitcoin overnight, or they have to use their money that they have in the bank from the RRP programs to buy Bitcoin and shit overnight to abuse it, sell it off after a nice day of pumping, a nice night of pumping it, take that liquidity that they made and put it back into the stock market for the following morning by buying their assets back. This was all Bitcoin, Satoshi Vision, Bitcoin Cash, everything. Polygon, Matic. I'm super bullish on Matic. I love Matic. Everything was down, and there was no news. China actually had good news about crypto. Damn, come on. Where's that post at? All right, I posted up this tweet here. If anybody hasn't seen it yet, go ahead and go vote over there. I put up a tweet like, are you buying more AMC, more GME? Are you buying both or hodling? Or are you paper-handed bitch? And it looks like I had 389 votes. Most people are not paper-handed bitches. So that goes to show that even though a lot of paper-handed bitches were probably too shitty to click that, a lot of people are holding this thing. They know that there's a lot to run here. And yeah, but Chain, you're right. They were greedy during COVID. They went to kill these companies, and now they're getting screwed, and they're going to go out of business for it. And I could not be happier. I could not be happier for them. They deserve it. Lawsick says they need to own their mistakes and stop blaming retail. And you are absolutely right. Like, what did we do? We're just holding stocks that we love. I love video games and movies. What's wrong with us holding on to them? Because we like them and we think they're worth more than 30 or 40 or 50 or even $100 a share. You know, I think it's worth way more than that. And I'll hold it as long as I fucking want. It's not my fault that they decided to short it and now are going to bankrupt the economy. You know? How? Look at these numbers. Check this out, guys. What does JP Morgan have in assets and derivatives? 3 million. Oh, that's in millions, so I got to kind of change it. I got to do that in millions. So 3,207,521 millions. Bear with me 1 second. See, this is expressed in millions of dollars. So this amount in millions, not 52 million. It's 52,671,225 millions. All right. This number here for the top 25 commercial banks that they owe is $187 trillion. All right, that's $187 trillion. This is not some bullshit I'm making up. This is, again, the quarterly derivatives report from the OCC. That was in the first quarter. The second quarter one, when it comes out in a few weeks, is going to be 10 times worse. Let's take a look at Goldman Sachs. They got around, I think that's 288 billion, if I'm looking at that properly. And the losses is $50 trillion. Citibank has 1,684 billion. Their derivatives is losses unrealized is $46 trillion. Look at their futures. Their total futures, JP Morgan's got $1.4 million of them. Goldman Sachs, $1.4 million of them. And get this, where the fuck are they trading these? In the fucking dark pools. And where did we just last see that? Let's go straight over to the DD and the GME. But anyway, let me see if you guys have any more questions here. I'd be more than happy to answer your questions about this stuff instead of just rambling on. That's not my intention. My apologies. Yeah, banks are greedy, says Be Real Time. I did a financial sector in '06 and was working with subprime broker. People got houses off of stated income, no job to pay. They were passed on via derivatives. Then boom, '08. Yeah, be real. You know, like anybody, a stripper could go in and say that she makes X amount in cash and get a home without any real backup to prove it. And why the reason I say stripper is because a lot of these people that were buying these homes were people that had just a good amount of cash that could put cash down payments down. And a lot of them were, you know, in the escort and stripping industry. It was huge. These guys were selling way overpriced homes to them, knowing that eventually they wouldn't be able to pay them off when their balloon payment came into play. Sorry if this thing is kind of hiding your chats, guys. Sometimes if you say a bad word or swear word, I should say, not a bad word, but if you swear, it makes me click show in order for it to pop up. Stinkface, yeah, that's a good point about Tesla. You know, Citadel squeezed BlackRock during the Tesla squeeze. Tesla's the only stock that even comes close to AMC and GameStop at this point. But even still, it's like it's not even close. It's still not even close. If it was like from here to here, you know, Tesla would be right here and it'd be one of the tops. But AMC and GameStop are like way up here. Like you can't even see how high they both are. That's the difference between the two. You know, as far as like the top shorted stocks. Because that already kind of happened. That already went through. Citadel squeezed BlackRock. And BlackRock's out to take that money and power back from Citadel. And that's what's going on right now with this situation. That's why you guys are seeing Fidelity and Vanguard and BlackRock piling on AMC and GameStop as bulls. Because Citadel did the exact same thing to them with Tesla. And yeah, hey, Jason Cornell, you're right. Who would have ever thought that buying and holding would cause such a shitstorm? You know, that 5 million people, apes, people that like these stocks have invested in it, bought shares, lots of shares, and even some options because we know and feel that the price deserves to go up with or without these asshole shorts. But it's not our fault if they shorted it 10 times the float, 20 times the float. In my honest opinion, I think there's 2.5 billion synthetic shares. Easy. Easy. You don't come up with numbers like this. Okay, this number, 187 trillion, that's 5 times the amount of the entire global GDP. 5 times the world's GDP. That's what that number is. And it doesn't include all those shorts marked as long, which in reality would reduce their assets and increase their derivatives even further. Javier asks, Marcel, what do you think about investing in real estate after the market correction? After the real estate market correction, which I think will come a little bit after the stock market correction, I think it would be a really great idea to invest in real estate, particularly farmland, multifamily properties, apartment buildings, and such. You know, Bill Gates is now the largest owner of farmland in the country, in the United States. He's the number one owner of farmland because it's controlling food is power and money. Controlling land is power and money, and resources underneath that land as well. So there's a lot of great money to be made in real estate, in land, in apartments, in farms, in quarries. Some of the richest people I know invest in quarries. Some of the richest people I know invest in IT and network infrastructure and such. You know, it's just a fact. If you invest in something that people need, you're going to do well. As long as you are smart and you work hard and you're willing to work harder than everybody else. If you want to work 9 to 5 and start your own business or invest, you are not going to do well. That's just the way I feel about it. Yeah, the chain says let the market crash and then buy your dream home. Absolutely. Why the hell not? You know, and then there's people like me that just bought a house in January. I have no intention of selling my home for several years, at least two plus. And I don't even want to sell in 2 years. It's just like the minimum in my opinion. So that being said, I'm not really too worried about it because even if it does take a hit, it will eventually recover when BlackRock and Vanguard and so other such rich investors from the Moass such as us are buying up properties. It will help elevate property values again. Giovanni asks, how do they continue to roll over all this debt without consequences, man? Well, there's about to be consequences. These are the consequences. These numbers, this 5 times the world's GDP, not to mention when the reality of how much more it is because they're cooking the books, it is going to bankrupt the stock market. A lot of these companies, these banks and prime brokers, they might ask for bailouts. They might get it, but I think the majority of them are going to get thrown under the bus by Gary Gensler and 𝗗𝗄𝘀𝗀𝗀. I really do. Let me take a look here and see if I can find that. Where the hell is he? Let me just go straight to Gary Gensler's page. That would make much more sense. I visit him every day. I tweet him every day. Tell him, give me my fucking whistleblower money, man. And you know what? It's got to be under the it was the SEC Gov page. My bad. But yeah, let's take a peek at this, guys. Oh yeah, there's the announcement for Barbara Roper. That's cool. Bam. The SEC just obtained emergency relief charges against an investment advisor and its principal. These guys raised more than $100 million and are in a Ponzi scheme and have just are pilfering it and wasting it. And today the SEC announced a temporary restraining order and they freezed all their assets. They're going to throw the book at these fucks. And I'm so happy. I'm so happy. So I see what you mean about, and this is from way back. This is from 2014 that this occurred. I'm not going to click this. You guys can do it on your own if you want. It's at the SEC Gov Twitter page. Shit, my bad. I dropped my blunt. So there's going to be consequences, and Citadel's next. It's not the only one, guys. It's not the only one. All right? All these new filings like this. Today, we announced what the fees are for public companies and other issues to register securities. Fee rate advisory for the fiscal year 2022 is $92.7 million to register with the SEC. That is a record high. You see what I'm telling you guys? They are making changes. They're making it harder for these fucks to register more shell companies, and they're doing great things for us every day. This was yesterday, the 23rd, excuse me. And look, oh yeah, they're looking for a senior officer, chief counsel position. I should go in there and apply for that shit, just to tell them what the fuck to do. They won't hire me though, because I smoke weed. No, it doesn't matter. I don't want to be hired. I got business to take care of. I don't want to work for anybody ever again. The infrastructure bill is passed when Congress are able to sell and buy in new positions. Yeah, be real. You're probably right. They're going to make this thing happen so that they can make a ton of money, use their insider trading, because it's completely legal for Congress to use insider trading information to buy and sell their stocks. Ain't that crazy? But it's illegal for us. We'd go to jail. Like Martha Stewart went to jail for insider trading, but Congress can do it. Look at that. Silhouette, can these organizations manipulate their way out of all this since they have so much control? No. It's gotten too far out of hand. We saw it back in 1999 and the 2000 stock market crash when they had 33 trillion in liabilities. We saw it in 2008 stock market crash when they had, and the real estate market crash when they had 90 trillion in liabilities. All right. We saw it in 2011 with the debt ceiling crisis, 2013, 2018, 2020, we saw it during COVID because our economy is in complete shit and our entire GDP consists of GDP, government spending PPP money and American people spending stimulus money. Our GDP is a complete farce. We make nothing. Our exports are down, our imports are down for the last 3 months, and it's going to be even worse the fourth month because of supply chain issues. So even though jobs are up 900,000 jobs last month, unemployment is up way higher than that. 3.2 million people left their jobs in May. Bank of America, JP Morgan, and PNC have all passed on the Small Business Association policy that would allow small business owners relief. Why? Because they can't afford it. They can't afford it. They're going fucking broke. Bank of America selling securities left and right. Wells Fargo has recently stopped, completely withdrawn all of personal loans. They have no money left. They need every penny to pay back these short positions because they know this shit's going to fucking squeeze. The margin requirements for September 1st and October 1st. September 1st for hedge funds and October 1st for banks. For banks, it's going to be $1 trillion per. For hedge funds in September 1st, it's going to be from 10,000 to 250,000 per. Sure, you say that 250K is nothing for a hedge fund, but Citadel has 1,000 shell corporations, and they currently each only pay 10K in collateral, or they only have 10K in collateral in the bank. And now all of these 1,000 hedge funds overseas in the Cayman Islands and Caribbean and Brazil that Citadel is using, and in London, they're all, instead of having 10K, they're all going to need 250K. That's $1 million for every 4 that they have, right? That's why they took the money back from Melvin Capital. Citadel took back $500 million of their $2 billion investment in Melvin Capital and still retained a 3-year revenue share in Melvin Capital. What revenue share? Melvin Capital is down 43% from the beginning of January. Well, but Melvin Capital is going to be a fall guy like Archegos Capital was for Credit Suisse. Three major banks have decided to opt out of a new process for getting PPP program loans forgiven directly by the SBA. I know about this. I applied for this. So instead of being able to go directly through the bank, they're making it harder for us, and we're going to have to go directly through the Fed. Right? So Congress created this program to offer loans, and that's the entirety of our GDP is these fucking loans. And, you know, Bank of America was the number 2. Chase was the top, and PNC was 11. And that's just today. We don't know how much. And look, Grund, this guy Grund over here who applied hasn't had his $5,000 loan forgiven and was instead told by PNC that his correct maximum loan amount was just $917, leaving him on the hook for the rest of that $44,000 and change. And look, and he's like, it's PNC's fault I got this money. He said, now you guys want to come back at me for it. Unbelievable. This is the thing that they're doing to small business owners. Sorry, guys. Let me see here. Vachain, Ace of Shades, Black Zero. Man, Hodl for Harambe. Thanks for coming out and asking your questions, Giovanni. Hodl to TDR on CDS and credit default swaps. Credit default swaps are just the same tranches of mortgage-backed securities with and these other kinds of rehypothecated shares. They're literally taking these shitty mortgages and these shitty loans and default swaps and moving them around between each other in different packages in order to offset risk. And that decreases their margin requirement. And that's why because they're in such bad shape, that's why they're up 5,000% in 2021. Okay. So here's a TRS is a total return swap. It's an over-the-counter contract. What's over-the-counter mean? It's in a dark pool. So it's a swap that they trade in dark pools. And it captures an agreement between two parties to exchange the total return of an asset. So they'll take 5 shitty loans. We'll take 5 other shitty loans, put them together and say the total amount of these loans is $1 million. Or these swaps is $1 million. But if they all default, there's only $100,000 that needs to be repaid. So now they're saying that this is now worth $100,000 instead of $1 million, and it's showing up in their books like $100,000 worth of liabilities. And as with any swaps, the maturity and payment schedule is down to what they agree. So they could have very long time frames out on there. Let me go over here, guys. LIBOR rates. Again, London interbank offered rate based on the US dollar. Look at where it's at 2021. So it's cheaper than ever to borrow money as a hedge fund in London in order to be able to short these ETFs, these exchange traded funds, these credit default swaps, these tranches of securities. All right, hang on one second. I got notes for you. Even check this out. The start of these swaps, they've basically been packaging all these meme stocks into bundles. All right, and so it's like 2008. All over, except this time it's times 10, times 20. So these cycles, they come from these derivative settlement deadlines. All right, let me show them to you here again. Damn it, where'd my cycle go? There it is. These all occur in these 3-month periods, and all these stocks, these meme stocks, move together because they're in these ETF baskets. These TRSs, they're all traded over the counter for whatever price. These are the 3-month cycle. This was February 23rd through March for GameStop, and AMC did the exact same thing. You could put it right there and it would look exactly the same. The numbers over there don't even matter, you know? And the same thing here, May through June. And then again, August 25th, that was today. We all know we had a nice green day, and then they shorted it towards the end of the day. And yesterday was a fantastic day as well. This is the nice green candle. And we're going to have a lot of futures hedging happening here until September 9th. And then we've got all the margin things, the margin requirements that have increased. We've got all these changes in rulings and filings that have been made. And that a lot of them go in effect September 1st, some of them September 20th, others days in between, and then October 1st with the bank's $1 trillion stress test every day. And now these things are not going to just be they're not going to have all day to figure out if they get margin call. They're not going to have all day to come up with a solution. They're going to have 1 hour, exactly 1 hour. And if they don't, after that 1 hour, the SEC, NSCC computers are going to automatically start buying it back for those hedge funds. And the computer doesn't give a fuck what the price is. Okay, that's why we say this price could get out of control when the mother of all short squeeze happens, because it's going to be margin call after margin call for one bank after the next. And so you're going to see the price skyrocketing super fast, and we're going to get halted. And then it's going to start again. And as soon as it comes back, it's going to keep skyrocketing. And it's going to get halted. And then it's going to keep skyrocketing. And it's going to get halted. And this is going to happen in succession until it calms down. And then another party is now being margin called an hour later because they weren't able to meet their requirements. It's going to be fun times. It's going to be some fun times ahead for all of us. Let's see, here's when are the margin calls coming? How do we know when? What is the significance of phase 5 on September 1st? 8% Abraham Lincoln. I think I just explained most of that. But if I didn't, let me know if you need more clarification, because I did cover that in the last video, and I could definitely cover it again quickly. Just going to try to scroll down here real quick, see if I can find it for you guys. I know I had the phase 5 over here somewhere. There it is. Bam. New margin requirements rules. Phase 5 starting September 1st. Any American firm that trades in the dark pools, okay, any derivatives in dark pools, is going to have new initial margin requirements. So it's going to mean instead of 10K, they're going to need 250,000 per hedge fund. All these offshore hedge funds, these overseas hedge funds, they're going to need 250,000 per. And they're not just all their own hedge funds. A lot of them are owned by big companies like Citadel. And so they're going to also have to be coming up with this money. That's why they took back this $500 million from Melvin Capital in order to cover a lot of this expense. Firm A and Firm B this is another one. Okay, this is another margin requirement. Not what I just said. Firm A and Firm B are required to post initial margin collateral for every derivative. Now, say that an example, for every derivative that exceeds $50 million versus their counterparty, they must all put a certain amount of collateral in a segregated account. Okay? They must both put the collateral of a certain amount, which is the initial margin. Let's say if it's a $50 million, that initial margin might be $5 million. And if that risk starts to get out of hand, that might go up to $10 million or 15 or more. And so if either party defaults, the segregated collateral account will be managed by a separate entity custodian, which means a third-party company, accounting firm that is able to handle this, will manage the said collateral. And then they will, so Kenny G and Citadel cannot just put collateral into his Cayman Island account like he has been and pretending like it's pretending it's segregated and separate and owned by this company in the Cayman Islands, because Kenny G still maintains the fiduciary fucking control over it. You know what? I need to find my guys at Rizzo Stocks, because now I forgot to show him on the last one, and I have to show him on this one. He's got amazing due diligence that we've been working on for weeks together, and I'm falling behind because I've been so busy, but our DD has been going wonderfully. Look at this, guys. This guy is a genius when it comes to figuring out the bigger picture, okay? Look at this dark pool volume. Get my picture out of the way. You guys don't care about me right here. This guy's able to pull up these huge numbers and not just take them, but actually extrapolate them and figure out how to make it work in the macro picture. The Fed July FOMC meeting outlined several economic indicators to reduce the current stimulus incentives provided to Wall Street and the wider economy via $120 billion in the way of purchases of securities and mortgage-backed securities. The initiation of tapering will squeeze the supply of money to the economy. 2008 2.0. I can't stress this enough, guys. This is going to be 2008 2.0. This is going to be something we've never seen in our life. It's going to be the Great Depression. Now, I completely agree with this statement here from the Wall Street Journal saying that it's unlikely that Federal Reserve Chairman Jerome Powell is going to announce in a speech that the central bank is officially ready to start pulling back on asset buying stimulus effort. But that doesn't change the fact that currently U.S. Treasury and Janet Yellen isn't buying shit back because they're running out of money. They have nothing left really within their extraordinary measures to continue paying America's bills for the next few weeks. So let's check this out. He was also talking about again today was a record high repo 1.147. Or no, it wasn't the record, but it was a very high. We've been over $1 trillion on the reverse repurchase every single day in the month of August. Actually, no, not every single day of the month. Every single day this week. Sorry, I may have missed. Yeah. Check this out. Where is this bitch? This is Citadel's SEC report that we've seen. It's not a new report. It's a 2020 financial statement. I know you guys, but the reason is because it's like taxes. Every report's a year back. All right, that's why it's 2020. So we're not going to get 2021s until the middle to the end of 2022. But by then they'll probably be bankrupt and we'll be laughing about this shit. So check this. They've got $71 billion in assets. Now, I know that Citadel, the companies all combined, have over $400 billion in assets. But Citadel Securities alone, they have $71 billion in assets. And how far are they underwater? $67.8 billion in liabilities. And look at the members' capital, $3,149. That's Kenny G's money. So their total liabilities is everything that they have. So they're planning on, in my opinion, they know they're going to go bankrupt. They know they're going to go bankrupt, and he's going to pay himself this amount as a bonus and his employees, $3 billion. Sorry, that's millions. No, in millions, 71,000 million. That's 71 billion. This is 68 billion almost, and this would be 3 billion. Yes. So they're planning on declaring bankruptcy, in my opinion. They know that shit's fucking too late. Okay. And the reason that they're still moving money to the Cayman Islands is because he hopes to have some money left in the Cayman Islands. But in my opinion, Gruber and Gary Gensler are going to bend them over and do their thing. And I think that they're really going to make an example out of Ken Griffin and Citadel. And he may not get jail time, but I hope he loses everything for being such a scumbag and defrauding the American people. Sorry if that was a long tangent, you guys. I get really pissed off about this shit. And it's like, I could talk about this for hours and show you proof after proof after proof and federal reports, statements, security statements, SEC reports, Federal Register and filings. And we could just never stop talking about it. So I'm just trying to touch on the key subjects because, we've all been doing thousands of hours of research together as apes and as members of this community that want to see Americans such as our, we want to make money off it. And hey, if somebody else can make money, great. That doesn't mean I'm advising them on what the hell to do. But if they can use this information and make a decision for themselves, then fantastic. Maybe maybe the entire world will be a little bit better off after the Moass instead of everybody getting screwed out of their homes, their jobs, and, the stock market and their pension and 401ks. Yeah. Javier. Thanks for asking the question, man. I hope I answered it. Giovanni, you as well, man. Thank you guys for showing up and asking all these questions. I think we should start wrapping it up here soon. It's getting kind of late, so let's take a couple more, and I'll try to make it quick and be as concise as I can for you guys. Sorry if I'm looking over here. I've got several monitors, and I'm just kind of looking at everything all at once across all my screens. I did the opposite, let my crypto run cashed out through at MC. I did the same thing. I was investing crypto. when I bought my house, because and then I had to pull money out of my and keep it all in my bank to buy my house to show that I had enough and to pay some bills. And then I was reinvesting in GameStop and AMC, and I was just in time, thankfully. I was just in time overall in all this, and as far as I'm concerned. And it's all thanks to my friend who was like, my buddy Nick Young, who told me, hey, Marcel, you should check this out, bro. I know you were telling me that you were thinking about getting back in the stock market. This is what I think about. Check out what happened with DFV and Deep Fucking Value and all this other stuff and what they were talking about. Oh, DFV seems to be onto something. And sure enough, here we are, months later. A lot of people are already rich, and a lot of people continue to get rich. And pretty soon, when the mother of all short squeeze happens, we're all gonna be a lot better off. Okay, hodl for Harambe. I hope the TLDR for CDs wasn't too long. Same for you, Abraham. Thank you, guys. Sorry if I'm trying to go back and make sure I don't miss any of your messages here. Networking Steel says networking seems like a great investment, and I totally have to agree. Cisco Systems is up for 40% on the year. Yeah, Cisco is a great company. What Giovanni asks, what do I think is the potential floor for EMC? Okay, this is not financial advice. This is just my opinion. This is the first time in my life that I've ever thought it's possible for this stock, AMC or GameStop, to get anywhere between $10,000 and $99,000. I will not be surprised at all if we see 10,000, and I will not be surprised at all if we see 99,000, and then people start getting scared and it coming down. It might go higher, it might go lower, but that's what I feel, and I'm holding for at least 10,000. But I'm going to hang on. I'm going to hang on shares all the way to the top, and I'm not going to sell off quickly at all. You know, as far as exit strategy for me, it's going to be when I think is reaching the top, where I think all the shorts have covered and all those synthetics are covered, and I'm going to keep looking into it, and all the other apes are going to do it as well. We're going to do our due diligence. We're going to check the short interest. We're going to see how many synthetics have been bought back. We're going to see how many FTDs have been bought back, what's on the threshold security list, etc. And we're going to continue to track this until the actual entire mother of all short squeeze happens. And because this thing might run up to 200 in October, and it might run up to 1,000 in a few days after that, and it might run up to 90,000 a day or two after that. You just never know. Not with this stock, because they've been shorting these stocks in 2006, 2007. I'm not kidding. 2006, 2007. And I've got proof. I could spend another 2 hours here showing it to you, but I'm not going to do that. We'll save that for another video. Vichain says 3.2 million people want to hop on that unemployment money. Yeah, 6.2 million people, actually. 3.2 million people want to hop on that unemployment money, probably. That's why they quit their jobs. Probably to take that government money or to do something else, you know, to diversify. Close some of this out. Like, man, I love this chart. God damn, tomorrow's so fucking bullish. Or later today. We got to go to bed soon or whatever so we can get up and make sure we're on time for the market open, if that's what your plan is. And I don't recommend watching it every day, except on days like we've had yesterday, the day before yesterday, and today, because when you're having price action like this, you don't have to watch it all day, but you definitely have to have your price alarm set on your phones or on your computers, and getting emails and stuff like that, or text messages with alerts, and you know, keeping your account handy at all times, your phone charged, you know, your computer going. So if you need to sell an option, if you need to add shares, if you need to buy shares because the price dipped, you know, you want to be able to make your moves. Let's close some of this out. So yeah, these notional derivatives, man, check this shit out. These derivatives are just fucking skyrocketing, man. And they're going to... Look at these dark pool percentages. I don't know if any of you guys have seen this yet. Look at what they're doing with foreign exchange. It's almost 100% traded in the dark pool. They're controlling the price of foreign exchange. Morgan, Wells, HSBC, Goldman, Bank, B of A, Citibank, and JP Morgan. Look at that. 100, 96, 98, 98, 97, 98% over the counter, dark pool, hiding prices for foreign exchange. Okay, look at other, just other. 100, 99, 100, 100, 156, 93. That's how they're manipulating these ETFs, these TRSs, these CDOs, and these CDS, whatever, all these MBSs, whatever you want to, every acronym that you can think of. Jason Cornell says Vanguard and BlackRock have more money than all the hedge funds combined shorting AMC and GME. Don't understand why they don't crush them. Let the squeeze happen. They are. They're gonna. And there are no rush. There's no rush. They know the way that this is going. They have options. They have options and shares and all sorts of shit all the way through January and later, because they always go further out than they need to, just in case. They're going to make a killing. They're going to take the vast majority of this money from Citadel and these other hedge funds. And Citadel will no longer be the biggest market maker in the world. Beats by Jay says, I think that's their plan, but huge institutions play the long game. Yeah, exactly right. That's what I just said, man. We're on the same page, guys. Birdie Hunter, good morning from the Netherlands. First time on the channel, thanks to Jackson Hunter. Thanks, man. Thank you, Birdie Hunter. I appreciate you. Your title triggered me. Proof green, huge candles coming. I hope so. I really do. I hope that after viewing some of this, you can see why I feel that way. Now, I think it's pretty darn clear. Look at this. February through March. Look what happened before it for GameStop. And then May through June. This is the 3-month cycle for these futures contracts. And here we are now. Today's August 26th. It's going to be the first day of the green. And it's going to be a massive, massive green. I'm not saying today is going to be a huge, huge day more so than it was 2 days ago. But this series of greenery that we're going to have, not just marijuana, but money over the next few days through September 9th, in my opinion. Overall, there's still going to be red days like there was over here where it's shorted heavily. But overall, because they're trying to maintain the price under control, overall, we're going to be seeing a very good few weeks. Glizzy with mustard said, speaking of bad shake, man, these pre-rolls I bought last week were all trim. Yeah, most of the pre-rolls are trim, man. A lot of places, because that's what they not trim for a lot, not that much trim, but yeah. So if it was mostly trim, that's kind of a problem. I meant to say it's mostly a shake, yeah, but not trim. You have a change. September 1st through 20th, I think will be a beautiful month as well. Scott Grigg says, thanks for all you do, Boss Blunts. I appreciate it, man. Thank you very much. I don't do this. At first I started doing this for myself because I just wanted to learn more about AMC and GameStop. But now I'm doing it because I really feel that Americans need to know not only about these stocks, but about the entire truth of the economy, these federal reports from BIA, OCC, CBO, the Federal Reserve, and they come out every week, and nobody's talking about them because it's terrible fucking news, and Fox and CNBC aren't going to tell you that because they're owned by companies like Citadel and other banks like JP Morgan, so they're not going to come out and tell us how shitty our stock market and economy is really doing. They want to keep us in this as long as they fucking can. So when things do get out of hand, they'll be the first ones to fucking sell off, throw the hedge funds and banks that they need to under the bus, and leave the American taxpayer and the stock market investors holding the fucking bag like they did in 2008, 11, 13, and 20. I know I lost a lot of money in 2020, and I made most of it back. I made more than that back, but a lot of people didn't. Okay, let's put it that way. Parabola. Yeah, it does sound delicious. Thanks, Joe. I hope to be a wealth of info. That's what the point is. I can't say I know everything, but I've had a lot of experiences in my lifetime, as a small business owner, as an entrepreneur, as a real estate broker, and other things that I've done that I think I've learned a lot that needs to be shared because I've taken a lot of time to put the pieces together, and I can't just keep this shit to myself and fall asleep at night pretending I don't know that these banks are going to bankrupt their goddamn economy. These numbers that they have here are ridiculous, and they're easily found. You just got to go out there and look for them. This is the H8 report, man. Shoot, sorry about that. Let's see, table 3. Their liabilities went from 18 trillion to almost 20 trillion in 1 year. And their assets after their liabilities went from 1.9 trillion to 2.01 trillion. So that barely went up $200 billion. You see how they're losing almost 2 trillion to make 200 billion. This is the problem. And it's not one. Again, I showed you table 2, table 3, here's table 4, 17 trillion in August 11th, and 15.8, damn, in July of 2020. And how much did they make? It went up from 1.9 trillion to 2.01 trillion. That fucking sucks. That sucks. They're going to bankrupt our goddamn economy. What did they spend it on? Other trading liabilities like derivatives, all these ETFs and credit default swaps and CDOs and super senior synthetic credit collateralized debt obligations, etc. 674 up to 738 billion in liabilities now. Again, that's just the companies that are shown on this particular table, the banks. Here's another table. 19.2 trillion was up from 17.7 trillion. I'm sorry, that's their assets. But that's fine because their assets, I mean, that's pretty good. That's nice, but these are all consumer loans, multifamily properties, such residential real estate, mortgage-backed securities. Okay, so a lot of these are actually liabilities as well. And their deposits, again, also liabilities. That increased from 15.84 to 17.2 trillion. Those are huge jumps in losses, unrealized losses. They got to pay it back eventually, and it's time to pay the piper. All right, let's see what's going on. Gio Garcia asked, is there any way we won't get paid? Nah, man, we're going to get fucking paid, whether it's from the hedge funds, banks, market makers, prime brokers, NSCC insurance policy, DTCC insurance policy, the SEC, or the goddamn Federal Reserve having to print us out brand new fat fucking stacks of cash fresh off the money printers. We're going to get paid. I promise you. Just don't fucking stick with Robinhood, because then you might not even be able to sell your goddamn shares. Not financial advice. Just common sense. All right, let me see what I got here. Got here a little joint. Jason Cornell, pissed me off too, Marcel. Just glad you're using platform to expose all the corruption. Thanks, man. That's the whole point. Like, that's the reason I'm here. Like, you guys saw my first few videos. I was doing it on my cell phone. I was doing it on my laptop because I had no interest in going on YouTube or Twitter. I was just like, man, I got to tell somebody about this shit. And so people keep telling me, hey, thanks for doing this. Keep telling people. That's why I'm doing it. So, because I feel that other people are getting value out of this, and it needs to be explained. In layman's terms, you'll see some people out there like Stephen Van Meter. That motherfucker's knocking off my DD every goddamn day. I bet you he's fucking watching right now. Because every single day, a day or two later, he's putting on my fucking DD on his channel as saying it's his fucking due diligence. And he's knocking it off left and right, pissing me off. At least give your people the credit that you're using their due diligence, such as I have here. I tell people if I'm using due diligence for somebody like Creand, or earlier from Francisco or Rizzo stocks, because these people from the ape community do great work. And I'm just putting it together with my macroeconomic perspective and understanding of business and the economy and global issues such as supply chain, because, I dealing in logistics and real estate and having companies in the fields, I really am learning how it correlates with the entire global economy, market, stock market, as a whole. Black Zero, predictions for the next inflation rate. I think the government's lying to us about the actual inflation rate. I think it was higher than 5.4% in July. And I think it's going to be around 5.8 to 5.9% for August. But they're probably going to lie again and say it was 5.4% again. Let's see, stocks and blunts. Yep, I've been there. That's why we're here, brother. Go dark mode with Twitter. Yeah, I guess that's a good point. Maybe I should. Sorry about that. That's my LinkedIn, by the way, guys. I've been posting it on Twitter and everything like that. And I ask people to go over there and like it, like the post, because it really goes out to a whole nother, plethora of people, So if you can, go on LinkedIn and share it and like it. I've got quite a few posts on there. Let me see if I can pull them up real quick. And I've been working with, not working with, but I have been sending guys like Peter R. Hahn. Like, I've been sending him my due diligence, and I asked him to review it. He reviewed it and said that it looks very good and everything's extremely plausible, and he thinks I'm onto something. So I won't say everything else that he told me, but that's just what I will tell you. Other guys such as Francisco from our due diligence group that have reviewed our due diligence, have master's degree in economics, and they work as economists, and he is one. We are in 100% agreement on what we believe. We've worked together on these theories because they're not really theories. We're just putting together these reports and the things that are occurring in our everyday lives in government. That's what the stock market predicates on. Parabola, no, thank you for coming. Thank you for asking questions. Appreciate you guys. Nancy Wang, unemployment benefits run out September 4th. Yeah. Millions will fall off a financial cliff. And one thing I haven't even mentioned, guys, student loan repayment starts in September. How many people are not going to be getting stimulus money anymore, or are unemployed, or are losing their job, or working less hours because of COVID, or losing their homes, or aren't getting their eviction moratorium money, and also have to repay their student loans now? Another layer on the cake of the macroeconomic picture, things that are going to cause the real estate and stock market crashes. Sadly, for every percentage point that unemployment goes up, 40,000 more Americans die. For every percentage point that the unemployment goes up, 40,000 Americans die. Let's see. Let's take it out here. All right, guys. Let's start to wrap it up here. Yeah, it's super complicated. Beats by Jay says, have fun in the rabbit hole. Yeah, no, man, my rabbit holes have gotten too crazy. I've tried to, back off them a little bit. Let me take a look here. I was looking for a particular post, but I've shared so much stuff that I don't even know if I can find it. Yeah, PB Jelly Games is a good dude. We're going to be doing a live stream. Is it live? No, I'm sorry. We're going to be a Twitter space with PB Jelly Games and a bunch of other guys doing due diligence on the weekend, either Saturday or Sunday. Go on Twitter to check it out if you want. Here we go. Oh, shit. Sorry about that, guys. I'm not trying to do self-promotion or anything. I just clicked the wrong thing. Damn it. Or was it the right one? There it is. Yeah, this stuff's crazy. If you haven't read this yet, like these derivatives are $189 trillion, and they don't include any of this stuff. They're not going to be able to maintain the liquidity. Moass is coming. Congress is on vacation. Infrastructure bill. Everything we do with COVID right now. The real estate industry. Homelessness, unemployment, poverty, eviction moratorium. We're going to see a huge segregation of the 1%. I really, really hate to say that, but it's going to be a lot of people hurting in America. Steele asked, do I have any positions in marijuana stocks? No, man, I've got everything in AMC and Gamestop right now. They're my only plays. They're going to make me a lot of money, more than anything else could. And then when I'm done, then I'll decide what else I'm going to do with my money. And we'll see from there. I haven't decided on that yet. As far as anything on the stock market, I know I am going to go heavy with business and real estate because that's my jazz. I love it. Let's see. The Merlin said, I just watched a video on real estate and my mind is blown. I didn't even have a blunt and I'm truly afraid and excited. Excited for AMC and afraid for the 2.0 Great Depression. Yeah, I agree, man. It's scary stuff. Honestly, like doing this due diligence, it brought me to tears. Been there. Thank you very much. I appreciate you guys for subscribing. I hope if you got some value, please subscribe and share and like, because that really does a lot. You know, if you could just drop a comment or something. It's not about my ego. I could care less. But just to get the YouTube algorithm to pick it up, to show it to more people that could potentially look at it. Because the more likes and the more comments that a video gets, the more likely it is to show it to other folks. So again, I'll just reply thank you, because I really appreciate you guys, first of all, but also for the algorithm. I feel like it's necessary to do, and I would appreciate if you could do that. I used to work in the cannabis industry here in Colorado, said Silhouette, and I personally will only consume my own homegrown flower. That's cool. I respect that. I've got some homegrown stuff going too. And yeah, no, all organic for myself as well. 100% organic. Yeah. And Glizzy with Mustard says, yeah, baby, the Department of NAV has been sending me emails all weekly. Okay. Yeah, no problem, Abraham Lincoln. So I guess we should wrap it up here. If you guys have any questions, you know, definitely let me know. I hope everybody has a great night and a great day. It's been wonderful talking to you guys, and feel free to ask me any questions. We'll go over things further. But if you have one more time, I'll just leave you here with this screen with this beautiful, beautiful futures thing that we have. This was originally posted by a guy named Bacho on Super Stonks, and